Hello, everyone, and welcome to the first and hopefully not last edition of The Big Question, a video series where we will answer the big question that we have been receiving most often from our clients that month. And to kick us off in June, we have an excellent question. Where do you see the market going from here? Now, that is a big question, a great one to start us off, but unfortunately, it's an impossible question to answer, at least with any true sense of accuracy. Now, as many of you know, we are very optimistic coming into this year for a variety of reasons. First, it became clear that we were very firmly on the other side of peak inflation, which tends to be a really positive catalyst for the markets. And secondly, we were also entering year 3 of the current presidency. So regardless of your political leanings, year 3 has historically been the best year of performance market-wise that we see during any presidential term, with an average return of about 20%. And lastly, 2022 was historically bad. So bad, in fact, that it was the 5th worst year of market performance going back over the last 90 years. And yes, while that certainly sounds a bit counterintuitive, at least relative to being optimistic for this year, after those other 4 historically bad market years, the market was positive each time and returned an average of about 30%. So again, as you can see, there were a number of things working in our favor heading into this year. And all of this was really reaffirmed with an exceptional first quarter, with the S&P 500 up a little over 7%. Again, another great sign for the market. When we've seen this type of start to the year in the past, the market has continued its strong performance for the remainder of the year. However, as we close on the first half of the year, the burning question remains: where do we go from here? What will the market do next? And while we certainly remain positive, trying to predict what the market will do next is a fool's errand. If this is so impossible of a question to answer, you might ask, how can we remain so positive day in and day out? And the simple answer is because we have a plan. We have a plan that will allow us and our clients to remain comfortable amidst the uncertainty. And when I say plan, I mean plan in more ways than one. Each of our clients has a financial plan, one that we can revisit and review and lean on during times of volatility. Also, each of our clients has an investment plan, a rebalancing strategy with a defined approach to manage volatility. And for each of our clients, we also have a plan to take advantage of the volatility, like buying what may be temporarily undervalued, or looking for opportunities to complete Roth conversions, or executing tax loss swaps. So for those who have prepared accordingly, volatility can be one of your best friends. From our perspective, you can really approach the second half of this year in one of 2 ways. One, with a plan, a game plan and a strategy for all of the knowns and unknowns that may impact the market in the back half of this year. Or 2, on the fly, trying to guess at where we may go from here. And when breaking it out in that manner, I hope the answer to this month's big question becomes much more clear. Thanks, everyone.